Welcome back, everybody, to another video. Today is by far absolutely the most wildest video I will ever make. The news is absolutely insane. The United States just said that all banks can now custody cryptocurrency. This is absolutely insanely massive for crypto and Bitcoin. I will tell you exactly how that'll affect you and adoption on a global scale. Also, it's not just banks that are starting to accept digital currency and DLT or distributed ledger technology, but it is also every freaking arm of the government. And it is going not just in the United States, but globally. Governments this is a discussion, a common day discussion in governments. And I will tell you all about that. Not just governments, but military also. And at the end of the video, guys, at the very end of the video, there's a project that I looked into about last year that is a social media competitor, and it is way better than the ones that exist today. It is amazing. It is absolutely crazy. And the best part about it is it is decentralized. All the users get to earn rewards and money very effectively. The token economic model is insane. And the best of all, the market cap is extremely small. I would tell you what the multiples, the gains would be, but you would probably just stop the video and just walk away and just unsubscribe for me because you probably think I'm insane. But I break down the numbers toward the end in an Excel sheet that you can follow clearly, and I think my rationale makes a lot of sense. So if that sounds interesting to you guys, slap a like, hit the subscribe, share with your friends. Stay tuned because this is going to be a wild ride. Let's get into it. All right, guys. So in probably the biggest news I have seen in an extremely long time, I mean, in a long time, when it comes to massive mainstream adoption, I'm talking about. So this says banks in the US can now offer crypto custody services, regulator says. The Office of the Comptroller of Currency is letting all national chartered banks in the US provide custody services for cryptocurrencies. Okay, this is absolutely massive. Massive. So, in a public letter dated July 22nd, Senior Deputy Comptroller and Senior Counsel Jonathan Gold wrote that any national bank can hold onto the unique cryptographic keys for a cryptocurrency wallet, clearing the way for national banks to hold digital assets for their clients. The letter marks a major development for the crypto industry. Previously, custody was the province of specialized firms such as Coinbase, which typically needed a state license, such as a trust charter, to offer the service to large investors. Now, large regulated financial companies that already provide similar safekeeping services for stock certificates and the like could enter the fray. Also, so before, in order to hold crypto custody, these institutions need to get special certificates. There's a bank in California called Silver Bank that got the certificate for it. Coinbase, there's BitGo. As you probably know, there's we've been talking about them a lot. Grayscale, right? So just a few, like a niche few institutions were able to custody crypto, and it's not just that. It goes into, we're talking about if a bank can custody crypto legally, that means they can offer bank accounts for crypto companies now too. We saw JP Morgan leading the way with this. This is huge. So the letter, which appears to be addressed to an unidentified bank or similar entity, notes that banks may offer more secure storage services compared to existing options, and that both consumer and investment advisors may wish to use regulated custodians to ensure they don't lose private keys and therefore access to their funds. Providing custody for cryptocurrencies would differ in several respects from other custody services or custody activities, the letter said. It pointed to the need for digital wallets, adding that because they exist on a blockchain, there's no physical possession for cryptos. Right. So it's interesting that people always say like you can't feel it, you can't hold it. When they talk about crypto, this is kind of one of the main arguments. But neither can you hold or feel the money that you pay with your credit card. And so this argument becomes increasingly invalid. And there is a private key that's associated with all wallets that hold the cryptos, right? And this is what the banks will be holding onto people's private keys. But you know what they say: not your keys, not your crypto. And so, if a bank is holding on to them, you're going to face the same type of concerns that you might with holding a lot of fiat in a bank. This has a lot of pros and cons, and I'll get into it after I finish reading the article. The OCC recognizes that as the financial markets become increasingly technological, there will likely be an increasing need for banks and other service providers to leverage new technology and innovative ways to provide traditional services on behalf of customers, the letter said. Banks can provide both fiduciary and non-fiduciary custodian services, the letter said. It also specified that banks entering the space should develop and implement those activities consistent with sound risk management practices and align them with the bank's overall business plan strategies. The OCC is currently headed by Brian Brooks, a former Coinbase exec who joined the regulator earlier this year. He's filled in as acting comptroller since the beginning of the summer and has already proposed a number of reforms that would benefit crypto companies, including national payment charter, which would let crypto startups bypass the state-by-state approach in terms of acquiring money transmission licenses if they provide payment services. So we have like a really interesting predicament here, and this is amazing that Brian Brooks stepped in as the head of the Office of the Comptroller of Currencies. This is a huge step toward massive adoption, right? We all know that everybody in the world kind of follows what America does when it comes to regulation and rules and laws and things like that. And was it earlier this year? I guess it was earlier this year, maybe 3-4 months ago, we had 40 different banks apply overnight to be able to custody crypto in Germany, because Germany passed a law similar to this that made it legal for banks to custody crypto. Everybody is going to start doing this. Why? Not because banks necessarily like crypto, because it'll make them money. And this is huge news. Imagine when Bank of America starts saying, we now hold Bitcoin. Earn earn 0.0025% on your Bitcoin savings account. I mean, this is coming. This is coming. There can be all kinds of investment products with them holding your Bitcoin or your crypto, and this is really, really good news for Bitcoin. Other crypto will probably follow. I'm sure Ethereum will be not too far behind, maybe Litecoin. And eventually, over time, others will probably be added too. However, I think it'll take a while. They'll start with Bitcoin, then they'll move to Ethereum, then they'll move to XRP, then maybe Bitcoin Cash, things like this. So, huge. Wednesday's letter also reaffirms the OCC's position that national banks may provide permissible banking services to any lawful business they choose, including cryptocurrency businesses, so long as they effectively manage a risk and comply with applicable law. It has been such a nightmare. A nightmare. I mean, we're dealing with this right now for my company. Getting a bank account, we don't even have a token. We don't even have a blockchain project. We're building infrastructure for the crypto space. And it is super difficult for us to get a bank account. And it looks like it won't be much longer. But this is really important. It makes things difficult as we are slowly exiting the traditional world where everybody's just used to making payments with the bank services, and we're entering into the digital asset world where we can be our own bank and we can transfer value back and forth without the need for intermediaries. I am trying to do everything within my companies purely on crypto, right? All my employees get paid crypto. I pay my vendors in crypto, suppliers, service providers. Our revenue streams are based in crypto. So, you know, on the rare occasion when someone asks for our bank to either send us money or for us to make a payment, it's difficult to do. It makes it extremely difficult. I spent something like 15 hours 2 weeks ago trying to figure out how to wire somebody money. And then I just figured after that, I'm just trying to convince them to just, I said, like, look, man, if you would just take crypto, I can have you paid in 5 minutes. And yeah, and that involved me teaching them how to use it. That's fine. You know, teaching them how to open a wallet and securely store it is a lot less time than 15 hours. So JP Morgan Chase is one such national bank that provides banking services to crypto companies, having provided support to Gemini and Coinbase earlier this year. Like the counterparts abroad, however, banks in the US have generally been skittish about serving the industry, perceiving exchanges and other startups as reputational and compliance risks. Not anymore. Booyah. This is like, this makes me happy. And you might be saying, like, Kyle, why does this make you happy? This is like the antithesis, the opposite of what Bitcoin, what cryptocurrency is, right? Be your own bank. F the banks. Right. I don't use a bank. Like I said before, you know, we may have to open a bank account just because the bridge hasn't been built between these two worlds quite yet. Or I should say, the bridges are being built. This is bridging the building the bridges, but that ability to fully operate in a digital asset space is still a bit hard to do. But with things like this, it's making it easier. And I can't tell you how many times people have come up to me and be like, Kyle, I want to invest in Bitcoin. How do I do it? And it's like, oh, yeah, you just got to open a wallet. You can get these 12 words. They're very, very important. Write them down. Don't let anyone see it, because if they do, they can take all your money, store it in a secure place, but don't store it digitally, because someone can hack your computer and then steal your funds. And then you get this, you know, this really long 32 character address, and make sure that you put that in exactly. Send a person so they can money. Like, this scares people a lot. And imagine how much easier it would be for the mainstream, because people hear about Bitcoin, and when the price gets over 10,000 and starts going up and up and up, you better believe, especially when Wells Fargo and Bank of America and Chase are all running competitive promotions on custodying your Bitcoin. Imagine the hysteria. Like, as we get news like this, it leads me to believe more and more and more that this next cycle is going to be a super cycle, right? And we've talked about that before. What a super cycle is basically you have these kind of, in crypto, in Bitcoin, you have these cycles, right? We've got bull markets and bear markets, and that's very normal for adoption of any type of technology. And each cycle gets a little bit longer and quite a bit bigger ups and bigger downs. Eventually, there's going to be what's called a super cycle, when before we had less than like a fraction of a percentage of the world who had Bitcoin wallets and participated in it. But one cycle, it's either going to be this next bull run or the next one after that, when we go from less than 1% of the world participating in the cycle to 50% or 30% of the world. Can you imagine what's going to happen to the price if we got up to $20,000 with less than 1% of the population of the world getting involved in it? Imagine what happens when we go up to 30% of the world or 50% of the world. Massive implications for price. It is no longer a question of if adoption. Obviously now. It shouldn't be a doubt in anyone's mind now. The path ahead seems very clear. This is going to happen no matter what. And as I get into the stories ahead, you'll see that it's not just banks, but it's all the governments who are getting involved too. And it's not, I'll get into that in a minute. But this is massive, massive news. It's extremely good for Bitcoin and other digital asset space. Let's move on to the next article. Visa. If banks weren't enough, good news. How about Visa? How's that sound for you? So Visa is approaching, and this is funny. I'm not going to read all of this, um, but I am going to tell you why it's interesting. So I think, who was it? I think there was a project called 10x before that was one of the first companies. I don't know if it was the first, but I know it was one of the first companies to offer like a Visa debit card that was linked to a crypto wallet where you could then use your crypto at any place that accepted Visa or Mastercard. And that was huge. People got super excited about that. But then these credit card companies said, nope, not going to deal with it. Can't use crypto. So then they got shut down. And then 6 months later, someone else would come along and they would do the same thing. They would say, oh, yeah, we're using Visa, Mastercard. Use your crypto anywhere in the world. People got stoked and they got shut down. And there has been this kind of back and forth push and pull with Visa and Mastercard for, I don't know, 4 years now, 5 years now. And finally, Visa is taking this very public approach to saying, yeah, no, we've always liked crypto. We've always been down. It's been in our DNA. In fact, they say here on this, let's see right here, digital currency is in Visa's DNA. Right. Well, I mean, that's true, digital currency, but crypto is something that they've been pushing back and forth for quite some time. But now they come out publicly and they have a whole usa.visa.com/solutions/digital currency, where they say, yeah, no, we've been doing this, we've been looking at it for years, and we're all about it. Yep, look at this Bitcoin on the homepage here, and Ethereum. So this should give you insight to what is going on, right? So banks, Visa, wait for it, Mastercard. So if that wasn't enough good news before you, Wells Fargo, JP Morgan, Bank of America, Chase. Now we have Visa and Mastercard. Massive. And this is the same thing. This article talks about it. It was just yesterday, Mastercard comes out and says, hey, guess what? Yeah, I know Visa is actually, I think this was maybe before this article, July 22nd. Nope, July 22nd. So they were about the same day. They both came out and said, no, we're all about crypto. We definitely want to support it. We've been behind it for a long time. You can now use your Bitcoin at 70 million merchants around the world. So that's Mastercard and Visa. And here we go. So now we're getting into so now we've kind of exited this on this video, the public open protocol, Bitcoin, Ethereum, crypto kind of subject. And now we're moving into more blockchain, right? And so there's this idea of, and I always kind of got confused and really was always kind of just shaking my head whenever you have these people that say, I like blockchain, but not crypto. Well, basically what they're talking about when they talk about blockchain is enterprise blockchain. So a distributed ledger of some type of technology of some type of sort typically doesn't require a token because you have private entities who are running the copy of the network. So let's say that you have some type of blockchain that runs across, I don't know, let's say banks. And each bank runs a copy of the ledger. And so every time that transaction is made, the ledger at each bank is updated in real time. And this would be considered a DLT, like JP Morgan is creating something like this. And they get to, whoever creates it decides who runs a copy of the ledger. And so they might do that for, they might do that for a reason of transparency and accountability, but it's not necessarily public, it's not open. This will make enterprise more efficient, but ultimately what will ultimately disrupt these systems are open public blockchains and DApps or decentralized applications, because still a enterprise blockchain will make centralized businesses more efficient. And that's good for centralized businesses. However, as decentralized systems become more efficient and better and more user-friendly, they will become adopted. We see this huge boom in DeFi right now. And so anyway, this is let's see, what did I want to talk about here? So this is the CFTC, right? Commodity Futures Trading Commission, and they had a little meeting, a little powwow the other day. And the title is Not All Central Bank Digital Currencies Are Created Equal, a Georgetown law professor said during Commodity Futures Trading Commission Tech Advisory meeting last Thursday. So CBDC, central bank digital currencies, have graduated from a niche idea to a topic that the U.S. Congress has discussed repeatedly this year. So again, when we talk about adoption, and I talk about this all the time, there's two different worlds. There's private permissioned DLT or blockchain, distributed ledger technology or blockchain, and there's open public permissionless, borderless, censorship-resistant protocols like Ethereum and Bitcoin. Both are good for adoption because, and this is something that I wanted to actually talk about, banks didn't want to be disrupted. Visa didn't want to be disrupted. Mastercard didn't want to be disrupted. The government didn't want to be disrupted. But they can't help but to be disrupted. And right now, they're trying to figure out how to adapt and react to what's going on. And you have this motto, if you can't beat them, join them. And they can't beat decentralization. They can't beat Bitcoin. So now they're figuring out, how do we at least profit from the situation and try to say, yeah, no, we're hip, we're cool, we're adopting, we're like Visa and is saying, yeah, no, like we definitely want to stay on top of technology and be the most latest, greatest payment rail. But what's going to happen to Visa, for example, is their merchants are still going to be charged the processing fee from Visa, right? So what I can do with my Visa and Mastercard, if I have my crypto in a crypto wallet that's linked to this Master debit card, I can go into a store and I can buy something with it, but the merchant will still be charged the normal transaction fees from the credit card. And that's not good for business. That's usually 3 to 5% of the transaction. If I spend $100, that means 3 or 5 of it goes to Visa. That's insane. If I spend $100 in Bitcoin, even with Bitcoin's high fees right now, I'm paying 10 cents or something as a transaction. And that doesn't even come from the business side. The business would receive 100% of that transaction. The sender pays a little bit. And we don't mind doing that. So, I mean, it would even make sense for a merchant to say, hey, if you pay in Bitcoin or a stable coin like Tether or USDC or whatever, we're going to give you 5% off on your purchases, or even 3% off. So then if you pay 0.1% or something like that in your crypto fees from your wallets or whatever, then it's good for both parties because you remove the middleman, which takes all of the middleman fees, right? So that's the $3 to $5 I talked about in that transaction. That goes back to Visa or Mastercard. So if I can get that $100 item for $3 to $5 cheaper and I end up paying 20 cents in fees, I'm happy. The merchant's happy. We're both happy. So these institutions that are being disrupted can't help. It's really interesting. They can't help but to try to adopt in order to be involved in what's going on and not get completely left behind. But imagine all of these merchants who are now who have been accepting Visa and Mastercard forever, and they walk in and usually these credit cards that are linked to these crypto wallets they look really cool, like metal. They're cool colors. They look different than most other credit cards. And so imagine like you walk in to go pay for something, and the merchant's like, "Whoa, what is that card? Metal card?" And they're like, "Oh, it's my crypto.com card or whatever." And they're like, "Yeah, no, I know that I'm paying $20 for these beverages and whatever, and but I'm actually paying with my Bitcoin." And the vendor's like, "Well, you're paying with Bitcoin right now? That's cool." It's like, "Yeah, it's awesome." And so then that store hears the same story over and over and over again, and they're like, "Man, everyone's starting to pay with Bitcoin. Like, what is this thing?" And then they learn that if they just skipped the credit card process and just accept Bitcoin straight up, they'd be making 3 to 5% more profit a year on their business. That's a lot for some businesses. right? That's a lot of money. If you're making $100,000 a year, that's $3,000 to $5,000 more a year you're making by getting rid of the Visa, Mastercard fees. So while these guys are trying to adopt, and this is the same thing that's going to happen with governments, in my opinion, right? It's going to take longer because it's much more complex. But even 5, 10 years ago, you would have said it would have taken forever to disrupt the payments industry. But we're seeing that happen now. So, going on with this article, central bank digital currencies have graduated from a niche idea to a topic that the US Congress has discussed repeatedly this year. Advocates have called for a digital dollar as a response to the COVID-19 crisis. Bullshit, they've been prepared for this for a long time, more before COVID-19, but it's an excuse. And also as a way to confront economic threats posed by other nations' tokenized national currencies. Barely a week after the CFTC meeting, the idea of digital dollar as an economic weapon to fight China's digital yuan was raised during a Senate Banking Committee subcommittee hearing. A central bank can issue central bank digital currencies in a myriad of ways. Boomer said, okay, so before I go into this next little topic, what's important to note here is this discussion here where they say it's also, this is why there's a fire lit under the United States' ass right now. And also as a way to confront economic threats posed by other nations, tokenized national currencies, such as China's digital yuan. China is way ahead, way ahead of the United States when it comes to blockchain, DLT, and central bank digital currencies. I mean, they already launched their central bank digital currency, and the United States is just figuring out how the hell to do it. Doesn't mean China will do it successfully. Doesn't mean they've built a perfect one, but we'll have to see. But they have been working on this much longer and way ahead. And why that's important. When you're talking, so China and the United States is in basically a economic war right now, right? We're posing sanctions, posing sanctions on them, and they're like, whatever, we're going to beat you anyway. They're building the One Belt Road, the economic trade route from China all the way to Europe that will basically alleviate the need to ship everything on boats. That means all of Europe and Asia will now be connected to China. That's insane. So, where was I? Yeah, digital yuan. So, why this is important? You're saying like, why is it so critical that a digital central bank digital currency would add so much value in an economic war? Well, because when you talk about a world reserve currency, meaning that right now the United States is a world reserve currency, and it needs to be shipped all over the world because it's used as an exchange of value for things like oil, commodities, things like that. Everyone's trading the US dollar. But when you're using antiquated payment systems like the SWIFT system and ACH systems, where we're talking about it takes sometimes 2, 3, 4 days to send US dollars across jurisdictions, halfway across the world. That is completely unacceptable in a world that is run by digital assets. Right now, I can send someone anywhere in the world a stable coin that's linked to dollar or yuan, and they would get it in like 5 seconds. Done. Easy. So what they're trying to do is update the entire infrastructure on which the fiat federal currencies are built on top of. That's why it's so important, because when I'm selling oil to someone halfway across the world and they have to wait 4 days to get the payment, that is not good. That's when you're talking about big business, oil, medical, war, things like that, and we're talking about holding up billions of dollars in payments for even a day. That's a lot of money that is not being used to make more money. This is why it's extremely important. If China comes out to the world and says, "Hey, you can use our digital yuan and have total settlement and receive your money in a matter of seconds." Yeah, you could use the United States dollar. However, you're going to be just waiting and waiting and waiting for your money to arrive. Nobody wants to wait for the money to arrive. Nobody wants to do that. All right, now you understand why it's relevant. A central bank can issue a central bank digital currency in a myriad of ways. So, in his presentation, Bromer discussed 6 key design considerations for a central bank digital currency that included the need to decide between an account or a token based model, meaning customers would either access currency through something like a commercial bank account, which would require identification, or through a tokenized system that wouldn't. Okay, so another key consideration is whether the central bank digital currency would be currency with a retail or wholesale based system. A central bank digital currency is reserved for the public, to purchase goods and send and receive money, for example, while wholesale currency would be limited for use by commercial banks and markets. Brumer said the nature of a central bank digital currency depends not only on how it is designed, but also how the Federal Reserve would choose to issue it. A Federal Reserve could either use the currency itself or ask commercial banks to issue on behalf and ensure that it's backed by the Reserve. Okay, this is actually, I didn't highlight this one here, but this is actually important. So they're actually going to be deciding, okay, do we issue a retail-based central bank digital currency, which means it would be used very much like cash, very, very much like cash, where you and I, average people, would be using, instead of paper dollars, we would just be transacting in digital dollars. However, they might just result to a wholesale digital dollar, which is used for only enterprise situations. That leaves a question then, if they do the wholesale route, does that mean that we stay with paper money? I don't think so. So it's probably going to be this currency that's used in every situation. I want to point something out here. So in this sentence, it also shows you just how ridiculous some of this thought process is. So Brummer said that the nature of a central bank digital currency depends not only on how it is designed, but also on how the Federal Reserve would choose to issue it. A Federal Reserve could either issue the currency itself or ask the commercial banks to issue one on its behalf and ensure that it is backed by the Reserve. What does this mean, backed by the Reserve? What does it mean? It literally, backed by the Reserve, it means nothing. And this is what I always think is funny. Like, usually when I have this kind of initial conversation with people about Bitcoin, they just go, what is it backed by? And then I just go, what is the US dollar backed by? What is the Thai baht backed by? What is the Chinese yuan backed by? It's all backed by nothing. There's nothing that backs that. If you have a dollar, you're not entitled to anything with it. It's just used it just has value because people believe that it has value. But this is just such an old world way of thinking, some of these people, that they just really don't understand what's going on. Okay, and then they go on to talk about some stablecoins too. But a central bank digital currency can have a competitive advantage over stablecoins, Brummer said. In his view, stablecoins like central bank digital currencies are underpinned by a varying degree of trust in the issuer. Central bank currencies can be seen as trying to provide more certainty and safety, if one will, behind the utility that a traditional stablecoin aspires to achieve. Okay, so this is the issue of like Tether, for example. Tether has like a $10 billion market cap today, and nobody trusts Tether. People don't seem to care, oddly enough, but I'm pretty sure, and if you know anything about Tether, you're probably pretty sure that there's not $10 billion sitting in a reserve somewhere that you could then, if 10 billion account holders wanted to go change their one Tether for US dollar, more than likely, I'm almost 100% sure of it, wouldn't have enough of the reserve to issue. So there is a problem of trust issuance here. But I also have a trust issuance with government, and I think you probably do a trust. I also have a problem trusting the issuance by government as well. Now, there are things called algorithmically backed or stable coins. I would much rather trust open source, public, decentralized code base that keeps its currency stable versus something like a Federal Reserve to issue my stable coin. So these are very, very interesting. When I talked about that, Ampleforth in the last video aims to be one of these currencies that remains stable by an algorithm. Basically, The more demand there is for it, the supply increases, which would decrease the price of the token, and it wants to stay around $1. So if it goes under $1, then the supply will decrease, making it less supply, equal demand would raise the price, and vice versa. So, and then moving on, a potential reason for decentralization and the use of DLT is improved resilience to faults in the traditional system, said Shauna Hoffman, global cognitive leader at IBM, adding that the Bitcoin distributed ledger has proven relatively resilient to cyber attacks when compared to traditional systems. Yes, so IBM definitely understands decentralization, and the Bitcoin network has been resilient to all cyber attacks, and it is decentralized and unstoppable. It is very unclear what these people that are making these central bank digital currencies are thinking when they talk about DLT. You know, who's going to be running copies of these nodes? You know, what kind of vulnerability is there? You know, state level attacks. I mean, it should be sufficiently decentralized to where, you know, the more decentralized, the more resistant a distributed ledger is to attacks. You know, it's because in order, yeah, I won't get into it right now, but that just take my word for it at this point. Yeah, anyway, that's all I want to talk about. I went into a bit of detail more than probably necessary for this one, but I just want, the point was that, and this goes on, watch, check this out. Federal Reserve wants to hire a digital currency engineer. So I'll just read the highlights for you here. The Federal Reserve of Boston is looking to hire digital currency software engineers. So more discussion about Federal Reserve and digital currency and how it's central bank digital currency. They're really trying to figure this out. The Fed is extremely threatened by Bitcoin, very much. And they're trying to figure out what the hell to do. Meanwhile, halfway across the globe, Russia is making it difficult for people to build enterprise blockchain. So at first, I was really interested in reading this article. Then I started reading it and looking like, okay, so what this article talks about is really Russia is making it very difficult for people to build enterprise-grade blockchain. You know, ones that would connect to government and would connect to central bank digital currencies, supply chain, things like that. And at first, I thought, wow, this is ridiculous. Like, Russia's going to be so super behind and blah, blah, blah. Well, America is now making these other strides forward. Russia's taking a huge step back. But this entire article doesn't say anything about people building decentralized protocols. And so I actually can't fault Russia very much on this one, because when you're talking about integrated blockchain, you're talking about protocol that will integrate into the government's infrastructure. And it just makes sense that they would make it very, very difficult. They don't want people building complex code with backdoors that they can hack into government and their currency system and things like that. So what I was really looking for in this article, which I didn't find, was where they were talking about anything about people building decentralized, open public protocols that didn't give a crap about government, that were building, you know, decentralized apps and things like that. And I don't see anything in here about that. So it's not very interesting, but yeah, governments, banks, institutions. This is crazy. I mean, back when I first started getting involved in Bitcoin, I mean, it was never even in the news at all. Never in the news at all. And now it's constantly being discussed at the biggest institutions and governments in the world. Again, governments, military. The U.S. House passes 2 blockchain amendments in the annual defense budget bill. Again, I'm not going to read this. This is just talking about more. I just pointed this out because I want to show you there's even more government discussion in every branch of the government, every branch of the military, every branch of the institutions. I mean, it is everywhere right now, everywhere. And this is why I'm really starting to think that this next bull run, and we are looking at a world where digital assets and decentralized ledger technology becomes the norm. And this is happening so fast, it's insane. And this economic war between China and the United States is actually accelerating this massively. All right, and last up, guys, I want to tell you about a project that I actually found out about last year while I was in Korea, by by my friend Evelyn at FGB, and FBG, sorry. And I'm now regretting the fact that I didn't invest in the early investor round. However, it just still incredibly early, and it's very, very cool. So the app is called Vid. The website is Vid.camera, and I'm not sponsored, not anything like that. I just think that it was an awesome idea when I heard about it, and I think that it's really good early potential. I think this is something that's going to catch on extremely fast, especially with the TikTok bans and things like that. But this is a social media app that's really cool. So basically, so it is a social media app where you can basically like document your life, and you can choose what to make public and what not. So and what's great about this is they have a really cool token economic system built in, where all the value being created in this ecosystem is distributed to the content creators, which is awesome, right? Like, let's read this. Okay, so I'll just read the website to you. It's really easy and quick. Join today, earn money tomorrow. Social media is as it always should have been. So far, I think this launched, I don't know, like a month ago, or just kind of started taking off a couple weeks ago, actually. And the users on the platform have now earned $1.4 million. And I think there's only like, I don't know, there's not very many users on the platform already. What are you worth? Do you know your value as a user? Vid is a social media platform that pays for the value you provide to the platform. There's a secret we want you to know. You're more valuable than you realize. The secret's out. While you have been mindlessly scrolling, tech companies have been making trillions of dollars off your time and attention. You've been programmed to make money for them. Now it's time to get some of that value back. Users deserve to get paid. So, and I just want to read you a review that is on their app store. This was written actually like 4 months ago. So helps me journal my memory. I truly love this app because it helps my journal helps me journal my travels. I temporarily live in New York City, and every weekend my wife and I go out of our way to do touristy stuff. We do so much stuff that it's hard to keep track of all the memories until now. Vid allows me to record memories and keep it in my journal. I have the option to make my memories public or private, which is neat feature because I am a semi-private person. I also like the calendar format because it really feels like I'm journaling my life, and when I'm in my old life, or when I'm in my old age, I can look back and remember all the good times. Finally, I kind of feel like there's no feed to scroll down like Instagram or Facebook's main UI. I can view my tribe's profile one at a time and peek at their calendar and see what they've been up to the past week, month, or year. Very cool app. Highly recommend it. Slick design, and more importantly, it's for its utility. So what Vid is it's an app that lets you keep track of basically your life and video memories. And it has this really cool AI algorithm built in to edit the videos for you. So let's say that I go about my day, and I just like shoot little clips here and there of the day. And like, oh, I'm going to the beach today. I'm going to take my dog Rupert for a walk. Now we're going to go do this presentation. And then afterwards, we're going to go to this dinner. And if I just shoot little bits and clips of it, Vid will edit that all into like a highlight film of that day. And I can catalog that in my calendar for that day. And it tell me the time, the places I was at, all this stuff. And I can keep all that private, or I can share some of it publicly. And it's cataloged. So what's really cool is in a year from now, I can go back and look at what I did a year ago, or what I did 6 months ago, or 3 months ago, or 27 days ago. And it gives me like a highlight film of that day. And I can choose to share whatever I want with people. I can actually choose to share nothing if I don't want to. I can use this just to keep track of my life and the memories about it. And it's all decentralized, and this is all secured. You don't have to worry about your data or anyone getting into it, and you get paid for content. So you create these things called tribes, and people can join your tribe and watch what you do. And if they give you vibes, like cool vibes, whatever, you can earn some tokens. And I can see this really, really taking off. It's really cool. Like, we get to journal our life, and this keeps track of everything for you. I think it's amazing. As far as the token economics on it, let me show you this. So VI deflationary token economics. So there's 7. So right now the circulating supply is, I think, about I think it's on 30 million, and the and the price is about 50 cents per token. So that makes it a market cap of only $15 million. Social media apps are worth billions, and in crypto, some projects are worth billions far before they're actually doing billions of dollars in value creation. I mean, you've seen TikTok take off like crazy, and people aren't getting paid to do that. Here, you can get paid to do that, and this protects your privacy, and you're not going to have the crazy issues. And this is a perfect timing for this project too, in my opinion. So it's a deflationary token economic model. 7,000 tokens released per day to reward Vid app users. 20% of the token pool is used for universal VI payouts. 80% of the token pool is used to pay users based on their impact. Get feature bids, 90% VI goes back into lockup. So they also have this deflationary model where a lot of tokens will be put in a lockup for 300 years, meaning that it's basically burned. I don't know, maybe maybe the creators just thought that they would love for their great grandkids to be super rich one day, I guess. I don't know. 300 years, it just, who cares what happens at that point? And then you got vibes, so like likes. 10% goes back to lockup, so there's tokens distributed for you basically liking or adding vibes to someone's post, and 80% goes to the receiving content creator, and 10% to Vid Foundation. I talked to the founders about this, and I asked, like, what is when it goes back to Vid Foundation, what is that doing? And that's covering the server costs and costs of keeping the whole thing going. Also, it probably goes to marketing and all these kind of overhead that a company usually has to go through when they do something like this. And this is a huge one here, advertising revenue. This is why I think that this is going to blow up massive. You know how much money, like Facebook and TikTok and these kind of things make when they are collecting from advertisers? So when I talked to the founders, there was a large percent of, and I hope that this is a big number. It would make a lot of sense and make this thing go crazy. Like, let's say this number was, I mean, I think it should be something like 99%, but even if it was 50%, and then imagine that they were popular like Facebook or Instagram, that is making billions of dollars a year of ad revenue. That's billions of dollars a year being pumped into the token supply, into the value of the token. That will make this project be worth billions and billions and billions of dollars at the market cap of the value. And it looks like they'll have a marketplace. I guess this will be something like Facebook Marketplace. And so the seller keeps 80% of what they sell, 10% goes back to lockup, meaning they're basically burned, and 10% to Vid Foundation. Summation: small yearly release with constant return to source address in various in-app activities. Needless to say, if an app activity features vibes, ads, sales, percent return to lockup address begins exceeding 7,000 daily release, the circulating supply will actually begin decreasing. So yeah, so if we're seeing more than 7,000 tokens a day going to get locked up, then the token supply will actually start decreasing. Insane token economics, amazing idea. I love the project. I'm not a financial advisor, obviously, but I think this is very, very interesting. And it's an incredibly low market cap. I think it's a lot of room to, as they say, moon. Okay, now I just never financial advice. Never invest anything you're not willing to lose. But it is fun to speculate. And so here, I'm just showing you a little bit of speculation. So I just decided, hey, what's a new social media app that's popular? TikTok, right? It's owned by this company, ByteDance. They made a profit of $3 billion on a $17 billion of revenue last year. And when you go down here, it says ByteDance's private valuation is reportedly around $110 billion. But one analyst said it could fetch a valuation up to $180 billion at its IPO. Okay, that's a lot. Now let's speculate a little bit, right? let's just see what would happen if you put some money into this project. Again, I have no affiliation with the company whatsoever. I just think it has incredible potential. There's no other social media app where you can just kind of document your entire life. That's amazing. I would love to be able to see what I was doing exactly 437 days ago. Why not? You know? Or remember, like, man, you give a graduation or a wedding or something, like, you can just go back and just watch a freaking cool highlight film from that day. It's awesome. So let's check this out. So current market cap is approximately $15 million. So here is a speculation, because let's say like all social media apps that are popular at least hit unicorn numbers. So let's start off with the 1 billion market cap. So if it reaches $1 billion, that's a multiple of 67 times. 67x. That's like 67. What is it? 6,700% gains. Yeah, crazy. If it hits a $3 billion valuation, we're looking at 200x. $5 billion valuation, 333x. $10 billion valuation, 667x. $50 billion valuation, 3,333x. $100 billion valuation, 6,667x. That's crazy. These are insane percentages of gains. Like insane. This is X, right? So 67 isn't 67%. That's 6,700%. Right? So a $150 billion valuation is a 10,000x. So let me change these here to numbers for you. Let's see, number. Get rid of decimals. Okay. So if you were to invest $100, and this is the different valuations, right? So $100 at a 67x or $1 billion market cap turns into $6,700. And you can just go down here. So I'll just give you a couple of these. Let's say that you invest $1,000. Well, if it reaches this $3 billion market cap, that's a 200x. So 1,000 turns into 200,000. 1,000 at a $5 billion valuation turns into a $333,000. And if it hits, let's see, $100 billion valuation under this one right here, 6,667x, that $1,000 investment turns into $6.67 million. Okay, now let's say that, and a $1,000 investment, if it turns into a TikTok, turns into $10 million. $1,000 investment turns into $10 million. Absolutely insane. A $100 investment turns into $1 million. Life changing. All right, now let's just say that you were to put in $10,000. Well, even if it gets to the measly $1 billion market cap, you're talking about $670,000. If it gets to the middle of the road, let's say, the low end, like higher end of the low end, let's say it hits a $10 billion market cap, that $10,000 investment turns into $6.67 million. If it turns into this TikTok size thing, what are we talking about? We're talking about, what was I saying? A $10,000 investment. So if it turns into this unicorn here, let's say that it gets a $100 billion valuation or something, a $10,000 investment turns into $66.67 million. And if you were to, and then let's just go crazy. Let's say there's a $100,000 investment and it hit this huge unicorn number. You're talking about turning $100,000 into $1 billion. So feel free to take a screenshot of this. If you would like this graph so you can play with it on your own, let me know in the comments below, and I will share it with you. All right, you guys, thank you so much. I appreciate it. If you would please subscribe, it would be so great for me. Like the video, share with your friends. It's been one hell of a news day. Thank you so much. I will see you next time. Bye-bye.